Is there anyone among us who hasn't heard of the State Bank of India or SBI? Whether you have an account there or not, we see that blue logo in every street and corner of our country. SBI is truly a massive part of our daily lives. But here is something many people don't know. The power behind India's largest mutual fund house is also this very same SBI. I am talking about SBI Funds Management, the giant whale behind SBI Mutual Fund. And right now, they are coming out with one of the biggest and most highly anticipated IPOs of 2026. Do you know what the total value of this issue is? A staggering 11,693 crore rupees. Let me clarify one thing right at the start. You don't need to be an SBI customer to care about this IPO. Whether you're an experienced investor who trades every day, a complete beginner looking to step into the stock market for the first time, or even someone who holds just a single share of SBI Bank in your Demat account, this video is incredibly important for you. Today, we are going to dissect this massive IPO from every angle. We will look at its basic details, key dates, price band, and the company's actual financials. Alongside that, we will critically analyze its pros and cons. After that, you can decide for yourself whether to invest your hard-earned money into it or not. So grab a notebook and pen. Don't forget to subscribe to Bosswala English YouTube channel, and let's dive straight into it. Welcome back to yet another video of Bosswala English YouTube channel. I'm Akshara. Alright, let's look at some key figures first. When does this IPO open? How much money do you need to participate? This is a main board IPO, meaning it will be listed on both the NSE and BSE. Take a look at your screen to understand the key dates perfectly. IPO opening date is July 14, 2026. Public subscriptions open on Tuesday, July 14th. So from this day onwards, you can bid using your broker app. And IPO closing date is July 16, 2026. Bidding ends on Thursday, July 16. To avoid rejection, make sure to approve your UPI mandate before 5 p.m. that evening. Allotment finalization is on July 17th. The company will finalize who gets the shares on Friday, July 17th. Now about refunds and Demat credit, July 20. If you do not get an allotment, your blocked funds will be released. If you are lucky, the shares will be credited to your Demat account on Monday, July 20th. Now the big listing day, July 21st. SBI Funds Management will officially start trading on the stock market on Tuesday, July 21st. Now let's talk about the pricing. The price band is set at 545 rupees to 574 rupees per share. As with any IPO, you cannot buy a single share. You have to bid in lots. One lot consists of 26 shares. Therefore, as a retail investor, if you apply for one lot at the upper price band of 574 rupees, exactly 14,924 rupees will be blocked in your bank account. You can apply for a maximum of 13 lots in the retail category, which will require approximately 1,94,012 rupees.
Now, before we move into the company's financials, I want to share a critical strategy that most retail investors miss out on when a massive, highly sought after IPO like this opens up. If you are applying for an IPO, remember this. Applying from multiple Demat accounts linked to the same PAN will be considered as one application. The smart way is to open separate Demat accounts in the names of your family members or friends using their PAN cards. This allows you to submit multiple unique applications, significantly boosting your chances of allotment. When opening these accounts, choose a broker that offers 0 rupees account opening fees and 0 rupees AMC.
Personally, I use the Grow app because they do not charge any annual maintenance fees. The interface is incredibly simple and it allows you to track all your IPO applications in one place. Now let's address a crucial detail regarding this 11,693 crore issue. This IPO is entirely an offer for sale. In simple terms, what does this mean? The company is not issuing any new shares. Therefore, not a single rupee raised through this IPO will go into growing the company's business operations. Instead, the existing promoters are selling a portion of their holdings to liquidate their shares. Let's look at who is selling. First, State Bank of India. They are selling a 6.3% stake, which is approximately 12.83 crores shares. Amundi India Holding, a leading European asset management company and SBI's partner, they are selling a 3.7% stake, which is approximately 7.54 crores shares. Together, they are selling exactly 10% of the company's total stake. And here is an interesting fact. Years ago, SBI initially invested just 19 crore rupees into this mutual fund business. Yet, based on the upper price band of this IPO, the value of SBI's remaining holding alone comes out to a massive 68,670 crores. This is spectacular wealth creation for the parent bank SBI. While you can apply as a regular retail investor, there is a massive bonus opportunity if you are a shareholder of the parent bank SBI. If you held even a single share of SBI Bank in your Demat account as of the RHB filing date, which was July 8, 2026, you are eligible for the special shareholder reservation category as well. The company has reserved roughly 1.3 crore shares valued at approximately 750 crores exclusively for SBI Bank shareholders. The core rules for this category are to double your allotment chances. You can apply in both the normal retail category and the shareholder category simultaneously. And you can bid up to a maximum of 2 lakhs under the shareholder category. Remember, shareholders do not get any special price discount. You have to purchase within the same price band. However, if you happen to be an employee of SBI Funds Management, you get a special quota along with an attractive discount of 54 rupees per share. Now let's look at the actual health of the company. Is this company genuinely making money, or is it merely riding on its parent brand's name? Let us examine the consolidated final numbers from the last 2 financial years. Look closely at this table on your screen. It clearly highlights the company's major financial growth. First, let's look at total income. In financial year 2025, it stood at 4,236.15 crores. In financial year 2026, it increased to 4,976.11 crores, representing a growth of approximately 17.4%. Moving on to the actual net earnings, or profit after tax, PAT. The net profit rose from 2,540.15 crores in financial year 2025 to 3,067.38 crores in financial year 2026. That is an impressive growth of around 20.7% in profitability in just a single year. Next is the EBITDA margin, which measures operating profitability. It stood at 94.86% in financial year 2025 and remains rock solid at 92.46% in financial year 2026. This reflects a highly stable and robust margin profile. Finally, return of equity, ROE, which demonstrates how efficiently a company generates profit using investor capital. It climbed significantly from 33.77% in financial year 2025 to 43.02% in financial year 2026, underscoring superior capital efficiency. Look at those numbers. Over 17% growth in revenue and nearly 21% growth in net profit within a single year. The absolute highlight here is the 43.02% return on equity. It proves that the company is exceptionally skilled at turning equity capital into major profits. As of early 2026, do you know what their total assets under management across mutual funds, PMS and offshore funds stands at? A massive 29.4 lakh crores. They have safely proven themselves to be the undisputed kings of the Indian asset management industry. Alright, let's weigh things from both sides. Why should we invest in this, and what are the risks we need to watch out for? Let's check the pros first. First thing is the absolute market leader. In terms of assets under management, AUM, they hold the #1 position in India's mutual fund industry. Additionally, they command a massive 39% market share in portfolio management services, which is PMS. Backed by SBI, they enjoy direct access to over 22,000 SBI bank branches across India. No other mutual fund house can penetrate as deeply into rural areas and small towns as they do. They hold a 16.09% market share in live SIP accounts. The SIP inflows enter the company automatically every month. Consequently, temporary stock market downturns won't instantly disrupt their revenue flow. Now let's check the risks to consider, which is the cons. Brand concentration risk. A substantial chunk of the capital coming into their business is driven purely by the trust in the SBI brand. Therefore, any minor reputational hit to the parent bank could directly hurt this company as well. Next thing is regulatory tightening. SEBI is consistently trying to lower the expense ratios that mutual funds charge retail investors. Any further regulatory tightening in the future could compress the company's profit margins as well. Next is valuation pricing. At the upper price band of 574 rupees, the total market valuation of the company stands at roughly 1.17 lakh crores. This values the company at a P of E multiple of approximately 38 times. While it is a premium company, it is fairly priced when compared to already listed peers like HDFC, AMC. Because of this, investors expecting explosive listing day gains might find limited upside initially. So, what is your final conclusion? Should we hit the apply button? As we speak, its grey market premium GMP is trading at around 13% to 15% above the upper price band. This indicates healthy demand in the unlisted market. However, remember that this is not a lottery ticket meant to double your money overnight. So if you are searching for a fundamentally rock-solid financial business to add to your portfolio for the long term, this IPO is an excellent option. The trend of people shifting savings into financial assets is booming in India, and SBI Funds Management stands right at the forefront of that growth. Conversely, if you are applying solely for listing gains, keep a close eye on the subscription numbers on day 2 and day 3. If institutional investors like QIBs back it heavily, we could see a much stronger move on listing day. So what is your decision? Are you applying as a regular retail investor, or do you have the advantage of the shareholder quota? Let me know in the comments below. So if you like this video, do not forget to hit like and share this with your friends as well. I'll come up with the next topic in the next video. Thanks for watching.
Brand partnerships and advertising enquiries. Email brand@bosswala.com. WhatsApp 910-801-4192.
Bosswala. Be the boss.